Across the board, I think that leaves us with all Asian markets in the red right now.
At the moment, there is a narrative drift from China into India in terms of foreign direct investment.
The EBITDA actually gained 32%, and this despite a decline of almost 350 basis points in their gross margins.
Margins were better than expectations at 23.6%. Profit was lower because of a higher tax rate.
The bull side, you have UBS, which has a buy with the target price that they have raised to 1260. There's the first tick on the index. As we said, absolutely flat. Little bit of a negative bias now clocking in for the Nifty.
The earnings season's been all right. I don't think there have been any material shockers, so to speak. I think we were always expecting a soft quarter for IT as we went in.
The rising US yield is now acting as a magnet for global asset allocators.
The Nifty has given up a bit after rallying hard yesterday, currently down 30 points.
All of these movements are structural movements where we're clearly seeing leverage kicking in both on marketing and on OPEX.
Steady premium for the industry. The industry October premium growing at 14% for the first 7 months of financial year 24. Well, today is the fifth day in a row when we are seeing that the A quality in Delhi is in an alarming situation.
Mid-cap index has come off from the day's high. That was the day so far. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar, with me Surbhi Upadhyay, and we've got Ekta Batra in the house today. Hi Ekta, hi Surbhi.
Hi ladies.
Hi, and it was showing signs of a pickup. The Nifty in fact went about the 19,400 and now it's just slightly below that level. But it's been a day of consolidation. I think the only green we can take away is in the broader markets. The mid-cap index is a gain of close to about 0.1%. But this has been just a quiet session. After 3 days of big gains on the Nifty and the sensex, today markets have just paused, just absorbed, soaking in the gains and trying to hold their levels. Crude prices, by the way, have eased further. So in the morning, it was about $84.50 per barrel. Now we're down to sub $84 per barrel. So there you have Brent crude over there. Some levels to watch now. We're just a shade below 19,400. Yesterday's intraday high on the Nifty is 19,423. That's one level. And the other one is the 20-day moving average at 19,411. So those would be two markers to watch on the way up. And you know, when I was looking at the sectoral color, there is no big sector which stands out on the way up or on the way down, except the Nifty Pharma Index, which is up 1.3%. All the others, like the metals, the banking, the IT, are just up 0.1, 0.2 here and there. So it's only the Pharma Index which stands out today.
And Pharma has been doing really well. Ekta, I'm sure, is going to tell us more about it, right?
I think that was your cue to, do Closing Bell today.
Yes, absolutely.
Since yesterday, actually, the kind of buying that we've been seeing in Pharma.
I think that the entire broader markets is just peppered with reactions for the pharmaceutical space. So Alembic, Alchem, a lot of the stocks, even Piramal Pharma has seen just follow-on buying post its numbers. So it's a lot about the pharmaceutical space. Gland Pharma, for example, also post markets yesterday. So I think it's at the tail end of the earnings season. Everybody wants to release numbers before the Diwali holidays. And that's why you're seeing just a surge of pharmaceutical numbers.
Which is why it's great that we have you in the house today, our resident pharma expert, to help us make sense of these.
No shocks till now, so that's a good
thing. Well, touch wood, actually, it's not been bad. You know what, girls, I'll tell you that despite the fact that the Nifty screen right now is not looking anything, great or promising, I'll still call this a very positive day because the dip was bought. So that texture of the market was intact. At around 12 o'clock, we got a very sharp dip on the Nifty, and that was because of weakness in banks. And that's gotten bottomed into. You can see that graph right there just around noon. That slide on the Nifty was because of the Bank Nifty. Pull up the Bank Nifty. Same, mirror image over there. And from that dip, that index has now turned positive. And that's something that you'll have to take with both hands. Let's pull up the Nifty contribution chart, because a lot of these stocks that were languishing at that point in time, they've turned around. SBI, Axis Bank, IndusInd, Kotak Mahindra Bank. So you know there are strong hands in the market, which is why you're seeing a turnaround on the banking side of things. And pharma, of course, is a good sector in any case. You also have some other names, for instance, to pull the Nifty higher. Some of the consumer names like Britannia are not too bad. Some of the metal names like Hindalco are holding out pretty okay as well. I just want to caveat this, that today is also not a bad performance compared to what's going on in the rest of the world. Asian markets have had a sell-off. It's been a day of a lot of profit taking across Asia. Yesterday, remember, you had that mammoth 5% rally in South Korea, this huge rally in the Hong Kong Hang Seng. Today, a lot of that has come off. The Hong Kong Hang Seng was down 1.5%. Trade data, particularly export numbers from China, were not looking that great. So against that backdrop, Europe is actually down about 0.25% to 0.5% right now. So against that global backdrop of some consolidation and caution, maybe this is not really a bad performance for our market over here. But of course, we need to see if this can remain intact. We have the next crucial 60 minutes of trade coming up. So let's, in fact, get started. We have Mitesh joining in to help us figure out what the trading bets can be like. Mitesh, good afternoon. Very volatile day. I guess the nimble-footed smart traders, they would have been happy buying the dip. But what would you recommend now for the last hour?
So a day of consolidation. Good afternoon, Survi. I think, the indices haven't shown the strength to get past upper end of pivots, which is 19,450, 470 for me on the Nifty and about 43,800, 3040 on the Bank Nifty. But we haven't shown weaknesses yet. So I think after 3 days of rally, just consolidation. So we must assume that as of now, there's no threat to the up move, and maybe the supply pivots will come into play once the market reaches those levels. So we'll keep a watch over there. Till then, I think it's a buy on declines market. Around 19,450, I would want to liquidate a good part of my long positions and see if we have the strength to get past and then get back into longs. But I think the initial feel is that, around those levels, would want to take some profits. And on the stock side, ICICI Pru Life or ICICI Pru, that's the stock, which is breaking out or giving a good reversal. So that's a buy. Keep a stop around levels of 525, look for targets of 560 on the upside. And you guys are talking about a pharma stock. There's a smaller one, PPL or Piramal Pharma, or PPL Pharma as the symbol says. And that's a buy with a stop at 108.5 for targets of 125.
Okay. Mitesh, we'll come back to you. Let's invite on the show the management of Info Edge. The company, the stock price is absolutely flat. The revenues for the company continue to be on the slower side. So standalone revenues have gone up by 1.5% on a year-on-year basis. This is the 5th consecutive quarter where the revenue growth on a year-on-year basis for the company is in low single digits. And the problem is that the IT hiring in Naukri continues to be on the weaker side. To talk about the way forward, we've got Chintan Thakkar, the whole-time director and CFO of the company. Chintan, afternoon. This is Rima here. Can you talk about IT hiring? We have your Naukri revenues up 27% on a year-on-year basis. What was the IT hiring growth or degrowth, and what did non-IT hiring do, and how much does it contribute now to your Naukri revenues?
Yeah, so let's first talk about the Info Edge overall. I think you mentioned something around, around the revenue of 1.5%, but actually the revenue has grown up by 11.5%, right? It's actually billing, which is about 5%, and that's where the overall, on the overall basis, the billing is kind of, which is a lead indicator, which is going on, it's kind of steady as, as we look at the last quarter as well. But yeah, but, you are very right on the point that, this is because of the slowdown in the IT hiring, right? And IT versus non-IT, actually non-IT is still growing, but it is not growing as much to really kind of offset the decline in the in the IT hiring.
Numbers,
yes.
Can you share numbers, Chintan? In Naukri, what was IT hiring like? Was it up? Was it down? Was it flat? And even non-IT hiring, how much does it contribute to your Naukri revenues? And what's the growth there?
Yeah. So IT hiring has been declined, right? And as I said, that non-IT hiring has been kind of on a growth path, and non-IT kind of compensates a little bit for the decline in the IT hiring, but it is not good enough. So overall, we kind of bit flattish or little decline when you speak specifically of the Naukri India, but the overall recruitment solution, as a vertical, as a segment, is kind of bit flattish, right? So when you look at the percentage of IT hiring, when we don't have the exact number of how many jobs are IT and how many jobs are non-IT in that sense, but from the IT-enabled services, it is estimated that around 55% to 60% is from the IT-enabled services kind of customer, or the recruitment consultants who in turn are servicing the IT-enabled services customers. So we'll not have a direct number to that, but indirect derivative, if you add that as well, roughly around 55-60%, is the dependency on IT, companies, right? Okay. And the balance would be roughly in that range would be from the non-IT.
Okay, so Chintan, what is the guidance for the second half when it comes to Naukri, both on hiring within IT as well as the non-IT space? What are the trends that we can extrapolate for the second half in terms of revenue?
Yeah. Well, in terms of non-IT, there are certain segments, certain pockets which seems to be doing well, like pharma or telecom or infrastructure, real estate. Some of these sectors are doing well in non-IT. IT in general, barring some pockets like some of the hiring happening in GCC. Even GCC, when we talk about, there are GCCs which are for IT and GCC for non-IT. The GCC for non-IT seems to be hiring at a much faster rate than what GCC and the IT is, right? Now, given that we are kind of, if you look at last year in the same time, in the same period, and if you compare it where we are now, and if you look at our jobs peak index as well, where we monthly kind of look at what the growth in the overall job activity on our platform is, it looks like that we are right now, looks like that we have bottomed out kind of thing. But it's very hard to really predict, that how it would be. And, one is that how much time it will remain there when, even if assuming that it's bottomed out, and when the growth will start. I think that's a key question. We'll have to really wait and watch for the third quarter. We are hopeful because by the end of third quarter, we would have completed one full year of cycle of attrition in the IT industry. The correction in the IT started from last year Q3. So maybe it's a 12 months kind of a cycle. So it should end around Q3, and we are hoping that we can go back on a little bit on growth side in Q4. So that's our expectation, and there's no real data to say that yes, there's a growth that's upcoming. But yeah, some of the trends shows that maybe it's kind of closing towards bottoming it out. So let's we are hopeful for that scenario.
Okay, so hoping for a better second half with respect to Naukri on both IT and non-IT. Got that. Let's talk a little bit about the real estate business as well, Chintan, because 99 acres continues to fire away, right? The year-on-year numbers, I think, close to 25% growth. That's looking pretty good. Tell us what you forecast for the second half, and also what about the burn in this side of the business? Because the profit before tax, I mean, that loss number keeps coming down. I think it's down to about 16 odd crores in the quarter gone by. So what's the run rate there? And what can you forecast with respect to cash burn in 99 acres?
Yeah, well, we are hopeful that if the growth continues the way it has been, particularly last 2 quarters, and we are seeing a lot more efficiency on the cost side, particularly on the on the marketing spend, and if that continues, then we are kind of reducing the cash burn, and we would be hopeful that by Q4 something that we start at a run rate, we would hope that it starts kind of doing a break even. But again, our objective is not that. Our objective is to grow at a much faster rate. And if we think that there are certain investments required, maybe it's because of competitive pressure or maybe because of certain growth cycles that we are seeing or some growth in which we think is emerging, then we would continue to invest behind it. So break-even is not the objective, but it may happen if we continue to grow at a faster rate and we remain very disciplined in terms of how we spend money.
You mentioned competitive pressure. That's interesting. What's the market share right now that 99 acres enjoys? And can you elaborate a little more on the competitive intensity in the market?
Yeah, like right now in terms of the vertical search, real estate search portal, it's largely a 3-player market, and we believe that we are kind of ahead of the other 2 competitors. The other one being Magic Bricks and Housing.com. Nonetheless, they are very similar in terms of where we are, and in some of the geography, it could be a little bit of a fight about who's number 1 and who's number 2. There are certain geographies where we are clearly number 1. But I think we should also say that, when it comes to this particular market, it is just not the vertical players who are playing a role, but it's also the players like Google and Facebook. When it comes to digital advertisement for new launches of real estate, they also do play a role. So in that sense, it's a wider competitive landscape, particularly for the new projects, and the builder and developer projects. But when it comes to resale, it's the vertical properties like us who play a much bigger role.
Okay, all right, Chintan, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Info Edge. The stock is up around 0.3% at this point in time. We do have a consolidatory sort of market on our hands, but a lot of stocks are buzzing around. And once that stock is trend post its numbers, that stock is up around 7-odd%. There has been a margin expansion which has taken place. Manglam is here with the details on that. Manglam.
Well, incredible numbers coming in from Trent. No other way to describe it. You know, there was a huge revenue expansion at a time when the street is, struggling for areas where they see good consumer demand. EBITDA and net profits surge on high revenue growth, understandably so, because it's a retail business, so the operating leverage plays out. And it's the expansion of the Zudio format that Trent has laid out over the last couple of years, and that has become the key growth driver for the company as well. So just to run you through the consolidated numbers, the net profit grew by 189%. That was because the revenues of the company grew by 53%. Even if you look at year-on-year as a favorable base, there has been strong growth quarter-on-quarter as well. The EBITDA of the company has grown 80%. 13% margins turned into 15% itself. So Trent's numbers, despite the valuations and despite the big run-up in the stock, tells you two things. One, value fashion is the way to go for all the retailers in India who are looking to tap the growth opportunities beyond the metros, and that's what we've seen with Reliance's U-Star format as well, looking at Trent's growth in Zudio. And the second thing is that companies which trade at high valuations, if they consistently continue to report growth, the stock market continues to reward them irrespective of the valuations.
Absolutely.
Just one question. Does Trent share what is the contribution of Zudio to their top line?
Well, they do, but much later in a press release, and not exactly. It's usually just a few data points here and there. But that's one grouse that analysts have usually with Trent, that, the quality of information that they provide to analysts is not enough when it comes to individual brands. So we'll probably get some more data from them later.
They've definitely hit some magic mark with this Zudio, because quarter after quarter, it is this part of the business. And it really, it does not tie in with the wider intellect that there is there in the market, that there's only premium consumption that's doing well.
V-Mart is also sort of value, fashion, but in the hinterlands, more of UP, etc.
Yeah.
And look at the numbers. The same store sales growth for V-Mart was down 4%.
It was under pressure.
Right?
I
Or the top line
think
growth
it's the house of brands as well, because if I'm not mistaken, Trent owns Zara as well in India.
Yeah.
So that would also probably be a big kicker. If Mangalam's still with us,
yep.
Mangalam, is this the company which houses Zara?
Yes, Trent is the company which has a joint venture with Zara, so it's basically reported in below the bottom line. However, now as we speak, I guess someone in the company heard me, we have a press release from them. They're saying that their strategic choices continue to drive growth amidst relatively subdued market conditions. As of September 30th, their portfolio has 223 West Side stores, 411 Zudio stores, and 27 stores across other lifestyle concepts. We don't have other details apart from the fact that Fashion Concepts registered a like-for-like growth of over 10%. So a company that was earlier known for just Westlife and a little bit of Zara has now twice the number of Zudio stores than Westside, and 10% plus like-for-like growth, which is a lot higher than all the other peers. All the other guys are value retailers. This one's the one which has cracked the product and the price mix really well.
Oh, absolutely. And this is a question for everybody in the market who says that it's only all about premium consumption, right? From real estate to jewelry. We keep talking about premiumization and how the bottom of the pyramid isn't doing well. If anything, these numbers from Trent and the way Zudio is growing, it really challenges that entire theory and that concept. Thank you, Mangalam, very much for a lot of that information and all the details there. Let's actually ask Deepan about this. Deepan Mehta, Director, Lexer Equities, is our next guest on the show. Deepan, welcome you to the Trent debate. It just got me thinking, hearing Mangalam, that here you have everybody talking about how only premium consumption is working. Look at numbers from Trent quarter after quarter. What's your take on this stock?
Good afternoon, and thank you for having me on your show. See, you don't compare Trent with the other retail companies. This is an incredibly superb performance, and clearly Trent is an outlier. And the way the Zudio has worked out for them as a value retailer, I don't think it has been that successful for some of the other value retailers, especially, the other listed players per se. And at a time when consumer demand is slowing down, there is stress because of inflation on overall consumption pattern. To declare and report these kind of numbers is very impressive. And clearly, I think it justifies the high price to earnings multiple that this stock is trading at. Trent is one of the great secular growth stories within India, a great play on rising consumer spends, wealth effect, as well as rising consumer spending. And they still have a very, very long way to go in terms of increasing their network of stores. So I think great news coming through from Trent, another company from the Tata stable, after Titan to report these kind of great numbers.
Okay, all right. So Trent up around 7.5% at this point in time. It's rallied around 77% this year itself. That's the kind of outperformer that Trent has been. Well, we need to take a short break. Dipan will stay on, but we'll be talking to more companies. We will also have Aman Chauhan of Abacus Asset Management on the other side. Stay tuned. Welcome back. Well, it's a lot about the pharmaceutical stocks this afternoon. So I am going to talk about Alkem now. Now, Alkem, that stock is rallied around 30-odd% on a year-to-date basis. It's up around 4-odd% at this point in time. It's come out with its numbers, and that's what it's reacting to. In fact, it is the best margins that they've reported all the way since Q2 of FY23. So the margins have come in at around 21.7% versus 14.7% on a year-on-year basis and versus estimates of around 16-odd%. So that seems to be the key factor which has really enthused the street. Revenue up around 11 to 12% this time, so that too is better than expectations. And we have the profit, which is better than expectations as well. The street was working with around 436 odd crores. It's coming at around 620 odd crores. In terms of India, that was up around 5 odd percent. There is a high base which has impacted it. We have the generic revenue from the US, which is coming at around $92 million. That's up around 9% on a Q-on-Q basis. So overall, good set of numbers, and it's really the margins which have outperformed this time for Alkem. Well, Dipan, are you looking at this particular stock? The margins have done well, almost 22% for this particular quarter. Do you think it's sustainable? Would you be a buyer?
No, I think these are great set of numbers from Alkem, and I'm really surprised at the jump in the margins because, the pharmaceutical business, especially the India business, is pretty much a stable margin business, and how they can report such a high margin number needs to be, questioned. And the management needs to have perhaps provide some explanation for that. Of course, we take it with both hands because, a lot of the products of the company are also under the price controls per se. So maybe they've got a price increase over there. But the best part about Alkem is its focus on the domestic market, where the brands are the kings, and that's how they're able to sustain secular growth over the past several years or so. And that particular business model is not going to change. So very positive on Alkem, and really looking forward to what the management has to comment on why such great set of numbers have come through, and especially the question you asked about the sustainability of margins.
Okay, Dipan, we'll leave the conversation here for now. Thank you very much for joining in. By the way, BSE share price has crossed 2,000 rupees. The stock is up 270% in this year itself. So as the company gains some market share in F&O and that number keeps rising, look at the way the BSE share price has zoomed in trade. But let's invite our Alpha manager, Aman Chauhan, fund manager at Abacus Asset Management, on the show now. Aman, first, your top 3 takeaways from the earnings season so far for your portfolio companies, and have you made any changes in your portfolio based on what we've seen in Q2?
So broadly, the result season has been in line. I can tell you that as far as banking is concerned, most of the companies have reported in-line numbers. Pharma has been a positive surprise. IT, though the street has been disappointed, for us it's been in line. I can tell you that. Chemicals clearly has disappointed. So that in general would be the earnings season for us on the portfolio level. Not much changes on the portfolio. We continue to like financials. So though the large banks have not performed over the last 12 months, most of the large banks are flattish over this period. We continue to like them. So that is something that we feel can clearly outperform going ahead. So that is where incremental money is gone. And just hoping for a good festive season, a good festive demand. That's what I believe all the companies are also hoping for, and same is for us.
Absolutely. Aman, hi. Season's greetings to you and the entire team at Abacus. Hope it's a great one for all of you. Let me ask you about the new kid on the block. Not so much from a buy-sell point of view, but just your thoughts. I mean, Honasa, a lot of excitement around this IPO. It's a brand that everybody's very well versed with, but the debate has been really around valuations, because I think they're commanding over 4 times sales or some 70, 75 times forward earnings. Just your thoughts on how the market might look at some of these high-profile, high-growth, but expensive businesses. How would you view them?
So we have a very clear thought process at Abacus that we don't mind paying a premium for a good company, a good business, but the premium has to be justified. It should be rational premium. So for us, the sweet spot would be a PEG ratio of 1.5. Unless there's something which is very compelling, we'll go beyond that. So this company that 4 times sales, 5 times sales is clearly not fits into our criteria, and we don't have, I don't say any exposure in the portfolio right now. In the near future also, I'm doubtful that we will be looking at these names. So they're good businesses, but not at the prices at which they are commanding right now. And that's not what our philosophy is of being a value-conscious investor. So for us, it's a pass, most of these names.
Okay, so that's Honasa and expensive, names in general. Broadly speaking, what have you made of consumers, and would you look at adding anything? I mean, consumer is not a loved sector in the market right now. Earnings have been pretty pedestrian. I mean, volume growth is missing in most places. It's all about a good margin pull, which companies have demonstrated. Your thoughts?
So clearly there is a slowdown at the rural level, at the bottom of the pyramid level, because the inflation has hit them the maximum. And that is what we clearly see, that the urban companies or the urban focused companies still have a decent volume growth, while as the small town or the rural focused companies have seen a demand slowdown coming in. We have not taken any aggressive bets for these companies in the hope that things will recover. As I mentioned, just waiting for the festive season. If we see very clear trends that the demand has recovered and the companies are able to report decent volume numbers, we will be looking at these names. So for now, knowingly focus towards the urban-centric consumer names into the portfolio.
Okay, urban-centric consumer names. We were just discussing Trent. Aman, would you have a view on that?
We don't discuss stock specific. All I can tell you is that it doesn't fit our valuation criteria. It's a good company, great, but too expensive.
All right. Well, we're not discussing stocks then. Your thoughts in terms of, the outperformance for the broader markets. The mid-cap index is back to a gain of around 27%. We have the BSE small cap index, which is up around 31% odd. Are we good for more as the year closes in?
I think so. There can be a near-term hiccup based on the state election outcome, which is due end of this month. Bearing that, I think we are due for better times ahead because the economy is doing well. Though the global demand has slowed down, Indian companies, India as a country has gained market share versus China, versus many other regions, and that is showing in our numbers. So till the time growth is sustained, I think liquidity, both domestic as well as foreign money, will continue to see India as an attractive destination for investments. That money will continue to flow in. That will keep the sentiments positive and should reflect into the equity market return. So we are pretty positive on the markets from a one-year perspective. And then we have the central election sphere, where obviously we all are looking for a favorable outcome.
Okay. What about PSU banks? I know you hold State Bank of India, but or at least you did in the past. But what have you made of the PSU banking numbers? Because there was a lot of euphoria going into over the last 6 months when it comes to PSU banks. But numbers from, say, a Bank of Baroda have not enthused the market.
So overall, the theme for PSU banks is that most of the banks have been focused on retail lending. Capex as a cycle has just started to come up over the last year and a half. And this is the space where PSU banks are more active. And because of this, they are seeing the credit growth picking up. And they were all trading sub 0.5 book, 0.6 time book. And that 0.4, 0.5 has become 0.6, 0.7 for many of these companies. And that's the returns investors have already made on PSU banks. Going ahead, we feel it's better to be selective from the PSU banking space. We prefer the larger PSU banks than the smaller or the mid-sized PSU banks. And that's where our focus as well as exposure is.
Anything other than HCL Tech, which is there as a part of your tech exposure?
Not on the large cap space. In the mid cap space, yeah, we have a few names in the tech exposure. These are the names that we have been holding for the last 2-3 years now and continue to own them.
Okay. Just, a little more on financials. Aman, again, the lackluster stock performance from a banking perspective, that continues. And we've actually seen some NBFCs put out pretty decent numbers. Today's, of course, is Repco. By the way, the Repco stock, I was just looking at it, is up 6-7%. Fantastic growth in terms of the book itself. NIMs have actually expanded in this environment. What else would you look to add, if anything at all, in financials, Aman?
Non-financial based companies. We just discussed BSE sometime back. The stock has hit a new high. Wealth management companies, broking companies. This is the space that is also looking good. So non-fund based financial as a space is something that we are pretty positive on. So besides bank and NBFC, this is an attractive space one should look at.
And how do you find the valuations, considering, just going by BSE's share price run, it's been quite, quite the mover. So overall, non-lending financials, how are valuations here?
They are fair. So they're trading anywhere between 1 to 2 times book, and they earn decent ROE and ROA, plus a good 20 to 30% growth. Till the time markets are doing well, these companies are the direct beneficiary of the buoyancy in the markets also. So it's a decent growth sector, and hence the valuations are, I can say normal valuations. It's not something that they're too expensive that one needs to be worried about. Yeah, they are definitely not cheap at 1.5 times book for a company which is growing at 20% CAGR, 20-25% CAGR, which doesn't need capital to grow. It's a decent valuation to look at.
Okay. All right, Aman, just before we let you go, there's been some amount of a comeback in a couple of these diagnostic companies. You know, the commentary has been better from the managements, the competition is lesser, it seems, from the online aggregators. Would it be a time to probably accumulate these stocks, say, for a longer term perspective?
If somebody has a 3 to 4 year perspective, then yeah, it makes sense to relook at these names. They have corrected from the highs, and from the 70, 80 multiples they used to trade. They're now around 20, 25, 30 P multiples. So it's a high growth sector. It's a sector where there is a clear shift from unorganized to organized. So these companies are the natural beneficiary of that. From that perspective, yeah, but with a 3 to 4 year view, I think one can start looking at this segment also.
Aman, thank you very much for joining in, and happy Diwali to you, your family, and everyone at Abacus too. Look forward to chatting with you soon. Get into a break. On the other side, as always, we'll get you a check of what dealing rooms are saying in our segment D Street Chatter. We also get you a few BTST calls from our technical experts.
Welcome back. It is time for our special segment, D Street Chatter. As usual, we have Nimesh joining in with all the buzz. Nimesh, so day of consolidation, it's not a one-way ride today. What have you been hearing in the dealing rooms?
Yes, you rightly pointed out, it's a day of consolidation. Again, it's a high volume day is what I understand. The volumes are on both sides, but slightly towards the negative side. So the buyers from the larger FIs seems to be on the sell side. That's overall feedback. From a technical perspective, watch out for 19,450 on the upside. That's a big resistance level to watch out for. If that gets taken out, the feedback is maybe you'll see further short covering rally in many of those large cap names. So that's overall feedback. Again, but the theme clearly seems to be the PSUs. Like entire PSU basket is doing good today. In fact, for the last couple of days, the feedback is that the PSU bank index is where a lot of buying interest seems to be from the larger FIs. That's the space which has not participated on the upside, but clearly the volumes are on the higher side, on the buy side, on the PSU bank stocks. That's the overall feedback. Again, the overall the sense I'm getting is that the momentum clearly seems to be in the mid cap and the small caps. That's where the big outperformance continues. And even in today's trade, while the mid cap index has come off the day's high, but there are a lot of individual names which are outperforming. So the focus seems to be either on the PSU stocks or in the broader markets.
Okay, all right, Nimesh. And what's the chatter on stocks this afternoon?
Well, in terms of individual names, the first stock in my list is NMDC. There are very strong buy flows in NMDC for the last couple of days, and that stands out today as well. So expect high delivery volumes in that particular stock. So that's the first one. The second stock is Apollo Tyres. On the flip side, some bit of selling pressure is back in Apollo Tyres. Looks like a long only fund is an active seller. Largely, it's a profit booking after a big move that we've seen in that stock as well. The third stock is Jyoti Structures. This is interesting, a small stock. We don't talk too much about this particular name. It's locked at 5% upper circuit. There's a board meeting today for fundraising, and I understand some large HNI investors are likely to participate in this fundraising plan via preferential warrant. So that's something to track in Jyoti Structures. And the last one is HPCL. As I said, today is more like a PSU day. HPCL stands out, big volumes and big mover as well. Stock is up 6-7%. And again, the feedback is there are very strong buy flows. In fact, the con call went very strong. And that's when after that, you've seen a big up move in HPCL as well in today's trade.
And it's lifted up IOC also, Nimesh. Thank you very much for that. Those are some interesting stock news and tidbits there. Mitesh Thakkar is back with us for a few BTST calls. Mitesh?
Yeah. So I have two BTST or buy-side calls. Disclaimer that I have positions in IndusInd Bank and it's closing at the day's high, also above the range high. So we'll take away tight stop loss of about 10-11 points. 1474 is what I recommend, and a target of 1510, 1520 for tomorrow. And Ipca Labs is the other one. Again, a pharma name, but looks very good. This is a BTST with a stop at about 993 for targets of 1025, 1030.
Okay, all right, Mitesh, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So those are some BTST calls there. Well, let's get in some more data points, this time on the life insurance industry. Life insurance data for the month of October is out. Yash is joining in with the details on what he's picking up and the nuances of this. Yash, over to you.
Well, as far as the life insurance data for the month of October is concerned, single-digit premium, if you look at the total industry, the industry growing its premium at just about 8%. So far, in the first 7 months, the premium growth is 10% for the industry. But that's just half of the picture because, these numbers are largely dragged by one player, the largest life insurance company, that is LIC, because if you look at the private players, private October premium is up 24%. For the first 7 months, it's up 15%. Now let's speak about the two best performing companies as far as the month of October is concerned. Max Life, the October premium is up about 36% so far in the first 7 months. The premium is up 28%. Retail APE is up 38% in the month of October. SBI Life Insurance, another very, very strong performance. October premium at 40% growth so far in the first 7 months, 26%. October retail APE growing at 16%. Let's come to a good set which has been posted by HDFC Life. October premium, that grew by about 12%. So far in the 7 months, the premium growth stands at 14%. Retail APE for October stands at 17%. ICICI Prudential, after a few months of weak performance, this time around it was a decent set. October premium growing at 10%. 7 months FY24 premium up about 2%. October retail APE growing at 21%. Now let's speak about the weakest set of data which has come from Life Insurance Corporation. October premium was down 2%. 7 months FY24 premium down 24%. October retail APE, that also saw very negligible growth of just about 2%.
Okay, all right, got that. Thank you very much for the update there. So that's how the insurers have fared in the month gone by, Yash, with all of the data. Well, with that, let's move forward. It is, of course, that time of the year again. The festive season is around the corner, and we keep getting you special conversations as we look at, of course, more perspective on the market. Let's, of course, get you the latest one. These are conversations to help you get to a prosperous new Samvat. Prashant Nair caught up with veteran investor Vijay Kedia on his learnings from the market in the year that's closing out, and also asked him on how Vijay is looking at the current market setup, especially the broader markets.
एक सवाल आपसे पूछना चाहता हूँ, बाजार यहाँ कैसा लग रहा है? अब हम एक थोड़ा सा करेक्शन आया 5-6-7% का, स्मॉल कैप वगैरह थोड़े ज़्यादा गिरे, लेकिन अब वापस संभल गया मार्केट. क्या व्यू क्या है यहाँ से?
I think when we are talking about market, then we are talking about a lot of things. You know, the entire ocean we are talking about. And जहाँ तक आपका बात है कि ये इंडेक्स चाहे 5% 7% गिरा होगा, which most of the part I think it might have recovered also in last week something. But small caps, many small caps are down by 30%, 20 to 40% small caps and mid caps are down. I think it is a good sign so far market is concerned, because there was a froth. Okay, in the small cap and mid caps and all, because of this retail investors, they don't understand that they want to put their money and buy anything which they had been recommended. वो बोले मेरे अंकल के ड्राइवर से नॉलेज लिया, न पढ़ाई की, न कॉलेज किया, लोगों की सुन लिया, पेनी स्टॉक चुन लिया, पैसा इतना डुबाया, मजा आ गया. तो मेरा गाना भी है. So this is what was happening in this market. So I think this euphoria is settling down, but I don't think that it has settled down completely. This is my personal view.
Okay, I'm sure you want to catch more of that, and you can get that during the course of this evening. The show will play out at 7 p.m. So make sure you tune in for more from Mr. Vijay Kedia. But right now, more on earnings. And we've got another high flyer here. Check out Jyoti Laboratories. If we can just get the stock up on the screen. Last time I checked, it was about 7 to 8% higher. We have Manglam back in the house. Manglam, I guess the companies you're tracking, they're hitting a home run today. And this is literally Aya Naya Ujala from Jyoti this time around.
Well, about time, right? Because up until now, all the companies that reported their numbers were low single digit, mid single digit sort of revenue growing companies. But now we have the best in class, revenue growth from retail standpoint. Yes, trend. But now even Jyoti Labs, 11.1%. Up until now, the top honors of revenue growth went to companies like Tata Consumer and Nestle. But Jyoti Labs, with its 11.1% growth on the top line, has beat that. And not just that, in fact, the gross margins have expanded all the way from 40% to 49%. And the company has plowed back some of those savings into ad spends. But despite that, the EBITDA margin has increased from 12.2% to around 18.5% as well. That implies a 68% growth in their overall operating performance. The net profit of Jyoti Labs has grown by 59.1%. And the company told us that the volume growth in the second quarter has been 9% as well. And this is the highest volume growth that we've seen in the sector so far. Going forward, they are focusing on volume growth and further market share gains. Over the last few quarters, they have gained market share from industry leaders in a lot of categories. And they do say that the demand environment for them is resilient, along with the festive season and government spends, which are likely too. The stock has doubled in the last 1 year, but still trades at a steep discount to all the other industry leaders. So let's see if this outperformance continues. Will this valuation gap between Jyoti Labs and the others continues to narrow as well or not? But for now, a stellar performance coming in. Again, reinforcing the fact that even if a stock has run up, good results will ensure that the stock continues to move higher.
Okay, all right, Manglam. Thanks very much for that. Well, Surbhi, it is not just the healthcare stocks which are doing well. It is the consumption stocks. It is the pharmaceutical stocks as well. So, for example, Newland Labs came out with its numbers, and mind you, the stock is up 13%.
Oh, there we go. So it's a tough fight between consumer and pharma. But I think pharma is winning by a mile today. Mid caps and the large caps.
Alchem is up around 5% Newland Labs margins have expanded all the way to 33% versus 23.6%. Wow. Net profit 89 crores versus 38 crores. EBITDA is up 98% for this company this quarter. So it's definitely a huge beat which is coming for Newland, and margin expansion for the likes of Alchem as well. So there is tough competition in the broader markets on who's winning at post numbers. We'll take a short break, but we'll be joined by Jay Bala of cashthechaos.com on the other side to discuss the technicals. Stay tuned.
Welcome back. Jay Bala of cashthechaos.com is with us on the show now. Jay, 3 good days on the trot. Today is flat, but holding on to all the gains. Nifty is above that 19,400 mark and once again facing some resistance around the 20-day moving average. What have you made of the last few days?
Hi, Rima. Good to be on the show. See, the market's movements over the next few weeks or the next couple of weeks is going to be extremely significant from a medium to long-term perspective. And as long as Nifty stays below 19,850, the probability of market making lower lows is having a higher probability. But if 19,850 were to get taken out, there is a probability that this market will go to a record high for one last time, and that will be a mega top for several years to come through. So, but if the market were to clock lower lows and not take out 19,850, this will be what do you call a medium to slightly longer term correction, say that lasts for about 8 to 10 months time frame. So the market's price action over the next couple of weeks is going to be extremely important. From a very short term perspective, 19,480 is a very important resistance, and above that it's 19,850. So if as long as market stays below 19,480, the market's breaking below the October low is the most probable outcome.
Okay, Jay, hi, welcome to the show. Well, a lot of these PSU stocks are doing well. A couple of the PSU banks. Case in point would be, say, something like a Bank of Maharashtra has gained around 43% this year. It's up around 1.6% today. Bank of India is not doing too badly, up around 2.5% Central Bank of India as well. Anything that you would recommend within that space?
No, I would generally avoid banks, but Nifty PSU banks as such has got a unfinished up move. Probably it may make a fleeting high about 5,400 it saw last month. But this this is not worth the risk that's taking, because the overall my outlook for the main banking index, not the PSU banking index, is negative from a long-term perspective. I pointed this out several times in my interactions with you for the last several months. But that's the reason for caution here. But I think there is a little bit of upside left, slightly above 5,400 for the PSU banking index. But if you're already holding these banks, then you can trail with the stops with about 4,600 on the Nifty PSU banking index. But otherwise, no, avoid the sector.
Okay. Jay, I just want to go back to the point you made. You said if the market takes out 19,800 thereabouts, then it could be making a long-term, big top. So just if you could elaborate on that point and tie that in with how a lot of the global asset classes are moving, because, the US 10-year has cooled off. It's down to 4.6. The dollar is showing a little bit of a sign of a cool off as well. So the immediate propensity is to believe that maybe the worst is behind. A lot of these signs that were flashing red, they've started easing off. What have you made of all this?
Glad you asked that, Surabhi. The markets are likely to take out all-time high if the markets were to cross 19,850, and the all-time high would be somewhere in the region of 20,600. Maybe on a throw over to 21,000. So that's the maximum potential for it. When it comes to the global asset classes, how this ties in with the Nifty is that I've been projecting saying that the October 2022 high for the dollar index is not the long-term high for the dollar index. That's the view the majority of the markets are holding, but that's not the case. The dollar index has got short-term residual uptrend pending. I pointed out last time its consolidation bullishly above 104.75. The recent low was 104.85, and the fact that it's bouncing from there is a positive for the short term. And the bare minimum is about 119. When it comes to the US 10-year yields, the long-term objective for the US 10-year yields is 800 bips and nothing short of it. And what we are seeing is only probably a medium-term top. And if I look at the German 10 years, there's a probability that there's a probability that short-term top is not being clocked. But the US 10 years is a little bit ambivalent. But I will, the long-term for the when I say long-term is 24 months for the US 10-year yields. It's about 800 to maybe even 900 bips, but we'll work with a conservative estimate. The pullback could be somewhere close to about slightly short of 400 bips, and then the yield curve will start to strengthen higher. So that's how the markets are at this. And if you look at the US and the European equities are continuously clocking lower lows and lower highs. And if you look at main indices of the US markets, like the SOX, like the FANG or the Dow Jones Transportation or the Russell 2000. Russell 2000 in particular has broken below the 2022 low. So the main indices are hiding the weakness within the broader markets.
Jay, you've got a long trade that you would recommend on Hero MotoCorp. Can you tell us what the charts are suggesting? And Tata Motors is also precariously poised.
Yeah. See, the auto index's level of 15,700 is absolutely critical. And if 15,700 comes before 16,600, I would advise all the longs that you've been holding since March of this year to, pocket those gains. And, the two-wheeler space is slightly stronger when it compared to the four-wheeler space. If Tata Motors were to break below 608, they'll have a bearing on the whole sector and probably even the overall Indian markets. But as I say, there are still residual strength left in Bajaj Auto, Hero Motors, TVS Motors. So that's the reason for a long in Hero Motors with a stop at about 3040 for a projection of about 3400 for Hero Motors. That's the objective that's playing out here.
Jay, we'll leave the conversation here for now. Thank you very much for joining in. So that's the technical setup for our markets. Going home above the 19,400 mark, a slim gain of about 0.8%. But we spent a greater part of the trading session actually below the flat line. In fact, there was a very sharp dip somewhere around 11:45. The dip took us down to levels of 19,325. And from there, we've seen a near 100-point recovery to close on the flatter side. So considering that we've had about a 450-point bounce over the last 3 days, the fact that we're closing up in the green and we saw a 100-point recovery from the day's low is going to give bulls some comfort about this momentum, the strength sustaining in the markets. The mid-caps managed to outperform today. The mid-cap index going home with a gain of about 0.3%. The small-cap index will also come up for you on your screen. The big gainers were the pharma stocks. So the Nifty Healthcare Pharma Index closed with a gain of more than 1%, led by Sun Pharma, Dr. Reddy, Sun Pharma, the top Nifty gainer. Oil marketing companies did well after HPCL strong numbers. So BPCL, IOC higher in trade. Britannia also showing smart gains. Axis Bank closes up nearly 1%. On the losing side, you had auto names a bit subdued. Hero MotoCorp, Reliance Industries weak, and even Divi's Laboratory, yesterday's big outperformer, today saw a bit of a profit booking, and then you had a few brokerages like Jefferies downgrading Divi's Laboratory, so that stock came under pressure. But high flyers in the mid-cap universe.
Oh, absolutely. Mid-cap and small-caps did really well. The small-cap index actually is going home with a gain of almost 0.7%. Yeah, so the best of the lot, really. Mid-cap index is up about 0.3%. And if I talk about the winners on the earnings screen, there are so many names. Trent, we've been discussing this stock today, 9 to 10% higher. Jyoti, 8%. And as Ekta pointed out, Pharma's not far behind. Newland really tops the charts with a 16% price surge as the day is closing out. Alchem is up about 6%. You have Arvind Fashions that has done well. So plenty of high flyers in the mid-cap markets. By the way, not mid-caps, but large names. Oil marketing companies, they've done very well today with crude oil prices falling down. HPCL, IOC, etc. Even these names stood out quite well.
Yes, absolutely. Well, that's from the Nifty. And just for the Nifty, the 20-day moving average stands at around 19,411. So we've managed to just about recoup to those levels. So let's see whether we manage to build on those gains in tomorrow's trading session. The 100-day moving average now stands at around 19,455. So that would probably be the next point to look at, and the 50-day moving average at 19,560. Well, in terms of specific stocks, Surbhi did mention a lot of the pharmaceutical as well as a lot of these consumption plays which did well. But otherwise, we had a couple of these stocks such as Alok Industries, which was up around 6% Ircon, which was up around 4.5%. A couple of the PSU banks did well as well. So PNB was up around 1.6%. Bank of Maharashtra going home with a gain of around 1.5%. And not to mention Honasa, the newest listing, the newest boy on the block, is going home with a gain of around 4.4%.
Well, with that, it's curtains down on closing bell, but don't go anywhere. Our Summer 2080 special Commodity Champions comes up on the other side.